Hey, it's Mike over at Cross Country Mortgage, and it's Monday morning. It's time for your Monday morning mortgage update for the week of December the 2nd. Welcome to December. Hope you all had a great weekend. It was a long weekend. It was Thanksgiving weekend. Grateful for the long weekend. I hope you spent time with family and friends. And I hope you didn't set up any Christmas stuff before Thanksgiving. It's against the law. You've got to wait till Thanksgiving. Now we can watch movies. Now we can listen to Christmas songs, and now we can decorate our house. Okay, so what happened last week, what's going to happen this week. I always try to give you insight. So if you're out there buying and selling, advising people to buy and sell, you can give them some solid information about what's happening on the mortgage side of the market and how it's impacting your ability to buy and sell a home. So what happened last week? Last week, we saw a 63 basis point improvement. Money flowed into the bond market. Let's look at the chart here. I always show this to you. This is a live feed. This is trading mortgage-backed securities in the bond market. It's a 6-month chart. And all the way over to the left side shows 6 months ago, and all the way over to the right, that candlestick we call them is today's trading. You see it's in the red, a little bit of money flowing out of the bond market today. But look at what happened last week. A nice little run, 63 basis points, which means that rates should get better when we have that kind of a swing in 1 week, but rates didn't get better. And the reason is because there wasn't a lot of volume. There was a lot of activity, but not a lot of volume. Why? Flight to safety. Basically, the market was short last week. Monday and Tuesday was trading, Wednesday half day. All the bond traders, which is where mortgage-backed securities are traded, this is a representation of that trading of mortgage-backed securities in the bond market. All the bond traders parked their money in the bond market. All the investors that park the money in the stock market also put it in the bond market. It's called a flight to safety. We see this anytime there's a long weekend. Uh, Investors don't want to take a risk of something happening over the long weekend and to lose money. So they just kind of sit it in a safe place. And then today they pull all their money out or enough of it out and are back to normal trading. So there was, again, a light week, not a lot of things happening last week. And there was no rate change because, again, nobody really traded in volume. So now this week is very different, very volatile week, a lot of things happening. And we're looking at really three things. The jobs numbers are coming out this week. We're looking at the Federal Reserve, some stuff, people are saying some things, and then some political stuff we'll talk about. So jobs, first week in every month, the first week in every month, all the job numbers come out, wage jobs, unemployment, how many jobs are added, how many jobs are taken away, all of that stuff. And every day this week, there's data coming out, and all this data has the ability to move rates up or down. Remember, in general, if we see a stronger economy with these numbers, that's bad for mortgage rates. If we see a weakening of the economy, that's good for mortgage rates. What's a strong economy? More jobs added, people have work. That's not good for rates. A weakness is down, an unemployment rate goes up. Unemployment rate goes up, that's a weakening economy. If we see wages go up, that's inflationary. Businesses are spending more money. They pass that cost on to us. That's bad for mortgage rates. So, two data points come out this week that everybody pays attention to. And these are the BLS number, BLS, which is a survey from the government on Friday. The BLS always comes out on a Friday. And the government calls people on the phone literally and asks them what they're doing in relation to looking for work, not looking for work, do they have jobs, et cetera. And the other one is the ADP, and that comes out Wednesday. And that's a private data. That's data driven. It's not a survey, it's actual data. And these two reports over the last year, 2 years have been conflicting. The BLS shows everything's good. The ADP is showing things aren't that great, the private number, the data one. But everybody always hangs their hat on the BLS number, even though it's a government survey, and it has not been accurate. Why do we know that? Because they come out with these strong numbers, and then a few months later, they adjust these numbers and come out with these seasonal or whatever they want to call adjustments. And everybody pays attention to the initial BLS report that comes out. It's in the news, it's in the media, yay, 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 but they don't pay attention to the adjustment that happens a few months later. For example, earlier this year, they had a 30% adjustment negative, meaning that they said all these jobs are added, and they said, we made a mistake. This is the BLS. We didn't add those jobs. 30% adjustment, but nobody really paid attention to that 30%. And investors use this data to decide how to invest, how to put money in and out of the bond market, the stock market. Now, the ADP has been showing job weakness for quite some time, but there's now starting to be a shift with economists, with the Fed, with people that are investing, that maybe the ADP, the private data one, not the survey, is more reliable. And the other thing about the BLS is when they call people, if you haven't applied and or you haven't had an interview, they don't count you in the employment numbers or unemployment numbers. They don't even count you, so you're not even considered when they look at unemployed. You could be at home going on to Indeed, looking at job applications, and then deciding, yeah, I don't like that one, I don't like that one. You're still searching for a job. You just haven't sent in an application, and you haven't had an interview, and they don't even count you. So that's why people don't think that the unemployment numbers are really accurate. So this week, see if maybe more weight is put on that ADP, that private number that comes out Wednesday, and if these two are in line. Fed speak. So the last Fed meeting is in 2 weeks, and the Federal Reserve members will talk a lot this week. They have interviews, they have speaking engagements, and are they going to be in line with what's going to happen in 2 weeks? Everybody expects the Federal Reserve to cut rates in 2 weeks by a quarter percent. Are they going to do that? Are the Fed members going to be in line with that? So be paying a lot of attention to those Fed members that will speak this week. And the last thing is geopolitical. We know who the president's going to be, and he's basically picked his cabinet. Yes, people have to be approved, but for the most part, we know who's going to be running the different departments. And I've always said this, it doesn't really matter who is the president. It really matters which political party is making the decisions, the financial decisions in the Treasury and the Fed and Commerce, things like that. And we've heard a lot of reports, a lot of news about tariffs, Canada, Mexico, China, and everybody's saying that's going to increase costs and that's inflationary. That means rates aren't going to get any better. But keep in mind, it's not just tariffs. It is Dodge that could have an impact. Those two guys that are going to, get rid of all the excess spending. It's growth. Is our taxes going to go up or down? Will there be an increase or a decrease in the deficit? Is the economy going to get it better? So we hear all these headline news: tariffs, tariffs, tariffs. Prices are going to go up. Our business is going to move their businesses back into the United States or into India or other places, and that's already been happening. So there's so many things. The equation isn't just tariffs. It's everything's going to go up. It's A plus B, C squared, double this, triple that. There's so many factors that impact what's going to happen with the economy. And bond traders or people that invest in the bond market like long term, everybody's trying to figure this out. What's going to happen long term for our economy? Not so much the stock market, which is day by day, but what does a bonds look like long term, and why is that important? Because mortgage-backed securities are traded in the bond market. So the bond traders, the people who invest in the bond market, are paying attention to a lot of these uh, political issues to determine how they're going to invest long term, which has a direct impact on mortgage rates long term, which obviously has a direct impact on affordability, has a direct impact on sales and pricing and how many the offers that people make and the motivation of buyers and sellers. So we pay attention to this a lot, and this week will be impactful, and we'll see how it works. So a lot of volatility this week. We're carefully floating. I hope you have an impactful and a productive week, and we'll talk to you next week. Bye bye.